Not really interested what happened overnight in the Eurozone. I really don't care. I mean, when you get a big event, something like the ECB, and you get a huge reaction, nobody really gives a rat's ass about what happened in German inflation and Spanish inflation. I mean, no one really cares. You know, they're still weakening, but no one really cares. Um, in context of the major event yesterday and the major market reaction. Nobody cares about these reports. That's not moving the needle whatsoever. You're fooling yourself if you think so. So what we got coming up today is Canadian employment. Which is going to be huge for the Canadian dollar. Yeah. Wow, that looks like that's it. And then the ECRI weekly, and that is it. I don't see anything beyond that. So let's just go on and move into the euro here. And we'll jump into that screen quickly. Scott was saying, hey, Paul, would you mind saying again your data feed and broker you're used with NinjaTrader? Well, I have several brokers, and I'm not going to give out that information, that kind of information anymore. It really doesn't, there's all kinds of brokers out there to use. But as far as my data feed, I use DTN, and they're very good. I mean, I've used them, as I mentioned before, when MB Trading rolled over to, was it King Trading or whatever the name of that company is. But what happened was initially they were telling us that they would not support NinjaTrader. But it turns out they do support NinjaTrader, but then they said they wouldn't support it going forward for any customers coming over. So then I wasn't going to switch over then to them because I use Ninja for my Forex data. And so then I went over to another broker, but or a couple of other brokers. But that being said, I ended up going with DTN for my data feed. And they're very, very, very good. DTN is. So actually, Ninja even has its own brokerage firm, but like I said, DTN is very good, and I've used them even for data for the DAX and stuff like that. So it's very good. Like I said, that's why, as I said before, I never have any problems with data. When I used to be with MB Trading, their data was very good, but sometimes you got gaps in the data, and that always frustrated me. So on DTN, you can go back as far as you want. Here I'm on a 2-hour chart, and I'm just going back eons and eons and eons and eons. I mean, this is February of the last year. You see what I'm saying? And I could make it go back even further if I wanted to. But anyway, we'll get on to what's happening here in the euro. We saw that huge move yesterday, and we talked about this. We were talking about this area right here, this 783. I was hoping that they'd be able to take out this low, which they did take out the low by only just about, 4 pips? And then we turned around and came back. I was hoping that we could spark them down to 783, and I thought we'd see. And I said at the time, I said, if we take them down here, then you'll see a quick, 80 to 100 pip rally before you saw reaction, going the other way. And if you look at it, well, we have to look on a 30-minute. We got that, and then we came back, and then we just kept hitting the levels and darkened back. And then here was my extreme level on the other side, 11.18, and this is where the market ran out of gas at 11.16, and then we pulled back I think it was almost 100 pips. So, but obviously we reassert ourselves. I talked later on about taking a short. I thought it was a good value short against 12.25. It didn't make it to 12.25, but I'll tell you what, it does have me concerned about the euro because I think it just wants to work higher. And one of the reasons I referenced was, you know, all the volume that we had done in this area right in here. And you remember, I called this breakout here when we were discussing what pips are that morning. I called for this breakout right here because the dollar yen and dollar cat were already breaking out. So they were already breaking out from a couple of days prior. So I called for this breakout literally hours before it happened. Me and Pipsar discussed it, and we got this big breakout. And we talked about why, at the time, I called for the end of the move up here. Although I ultimately ended up getting short, and it was 12.68 is when I started putting on. I thought I was coming in at a very good price, and the market kept going even higher. But I was saying that we came too far, too fast. And as I said before at that time, I said, which sounds kind of crazy, I told Blake that morning, I said, this is a death knell for the euro. It shouldn't have come that far that fast ago, that's it. Although I was expecting something closer to a 200 pip pullback. There's no way in hell I can say I was expecting this, which is 500 pips. We came off, ultimately. So I was looking for 200 pips, a rally up, back and forth, and maybe did it around here. So when you look at, here's my concern is, so we got that breakout, we came back down. My point is that we never broke down to here, okay? And still the market could have, you know, regathered itself, but we never did break down like really low. So we've held this area overall very well. And then we rallied up, and on this test back, they had a chance to really clear out some stops and come into the 783. Which I thought that, we talked about two extreme prices, and I discussed that with Blake when I came on also. The two extreme prices I was looking for was 783 here, so I thought that would clear out the stops here. So we'd get a move down to around 783. I said even, you know, worst case scenario, you were going to get this area right in here. If the market got pretty scared, 783 to 767. But 783 was our extreme. On the upside, our extreme was 1118, and we already talked about that. And we saw a very nice reaction from 1118. But the point is that this fall here came right in here, so this market is looking at it's very well supported in this big consolidation, and this big consolidation is what I referenced when I made the call, literally hours before it happened. And it's not to go in and pat myself on the back. It's just saying that this meant something. If you remember, we were having that discussion, and I was referencing this same consolidation area. You know, the trend line was just where the trigger was going to be, but we talked at length about this. And literally, hours before it happened, we ripped them. And we had a pretty good run. But I thought in the end, it was just way too far, too fast. Nobody really had a chance to participate after, you know, they barely had a mild pullback, and then we took off again. That's why I was looking for a decent fall, but only about 200 pips. Not like ultimately what happened, which was 500 pips. But the point is, we've come back and tested into this consolidation area of good volume. And in order for the market to break significantly lower, we would have had to have broken past this area, then maybe rally up to here, and then we'd probably reassert ourselves lower. But that's not what happened. We never took out this area. So we not only did we do that, so let's clear out this, we even got above 1070. So now this is where we're coming at, and you can see the significance of the 1070. You see how 1070 Not that it ever got there, it capped this move. And then you see where the market had some trouble? Here, 1070 again. On the way up, it eventually took off. See where the market came back for support? And then we lost 1070. We lost 1070. We get the acceleration of 963. And look where we rally to 1070. Then it fails and we head lower. So try and tell me that 1070 is not key. So when you, once again, yeah, I might be a day trader / scalper, but I still look at the overall big composite of the market. Now, I don't look at a 4 hour. There's no way in hell I'm going to look at no damn 4 hour. I don't have no time for sitting over here watching frickin' grass grow while I wait for a frickin' 4 hour bar to materialize. You know, the 4 hour bar just came up, you know, an hour before. I'd have to wait till 9 Eastern for the next 4 hour bar. There's no way in hell I have time for that. And these are 2 hours, but like I said, it gives me the context of what I need. So even though I might be day trading / scalping, I look at the overall market and where it can go. Just like yesterday when I said the extreme levels are 783 and 1181. We didn't make it to 783, but we made it to 1118, and we saw a 100 pip pullback against that. Now the market eventually reasserted itself, because like I said, people were getting scared and covering the shorts. But you can see the significance, as I said here, on this 1070. So my suggestion would be if you're short, you know, Andy's short, and I think he averaged up, I don't know where he added up in here, but obviously he should be in pretty decent shape. My thoughts would be, and you can see the significance of this 1070 is, you ought to be getting the hell out of Dodge if you're short. And I don't have a dog in this fight. So it's not like as if I'm long from here or up here, and I'm trying to convince you. I have no position on the euro whatsoever. But if I'm short, I'm getting the hell out of Dodge on this move to 1070. Initially, I thought that we'd probably even hold them around here, around this 1118. But like I said, if you think about it, look at this wide range. So it can look bearish as all get out and going lower and everybody's getting scared. But I tell you what, this move down here to 1070, 1067 is going to be well supported. I can tell you that right now. Because let's say that someone had got short, let's say 100 pips ago or whatever. They're looking at where they're going to cover. They're happy as hell. It's 1059, so I think Andy had mentioned that 1059. That's what he was looking at. Maybe they can sneak on down in 1059, but I'll tell you what, I'd be careful. I really would. Because this market has got the momentum to really go much higher. We'll have to see what they'll do, but let's say we come down like this, like that. We get past 1255, you can frickin' forget it. 1255 is a 78% of this move. 1255 is the top part of this zone. You can see it was support, resistance, resistance, and then falls apart. We get past 1255, you can forget it. That train is gone. And we will go to the prior highs of 1376, 1492, and I say this on Twitter, and on our way to 1683. Maybe we'll tick it on up to 1730. I might be a day trader scalper, but I'll tell you what, that's how I end up calling some of these moves, because I look at the market in context. But if anybody's short, I'd get the hell out of Dodge as we trickle on down there towards this 1067, and then come back fresh for the week. I mean, if you really think, it's so bearish. That's up to you. I said, do what you want to do, but, like I said, I'd be exceptionally careful here. The market it'll probably rally back maybe towards 1118-ish up in here, and then it'll probably sell down a little, but it's going to have a bid tone. If you look at the overall composite of this market and all the work it did in here and how it defended it the first time and how it defended it a second time, there's no case, technically there's no case for the euro to go back down sub 108. Technically there's no case whatsoever. And other people know it. That's why they're going to be stepping in trying to buy this thing. I mean, it's not a matter of whether the Eurozone is so strong or whatever. It's just basically as simple as it is what it is. You do what you want. I'm just telling you how it lines up technically. Now, like I said, I don't have a dog in this fight, so I'm not long from up at 12 or wherever, or up in here, and I'm trying to convince anyone. Now I'm looking to buy, probably if we get down in this area right here. But I think there'll be other people, and anyone who's short from up in here, they're looking to cover too, and they're covering it down here towards this 1070 and 1067. Here it is on a 30-minute. Here's a 1070. There's 1048. Maybe if you get lucky, you can see this 1048. Well, here's dollar yen, maybe back up there to 1430, pull back and so forth. This is on the 2 hour. I mean, for my taste, I haven't been doing anything with the dollar yen. I'm just not interested until we get past 115. And if it doesn't, then so be it. I just haven't been doing anything. The euros I haven't done as much with the euros. Sometimes will come in and it's really rock and rolling up, like grabbing day trades and scalps and things like that. But to me, there's enough good action going on with the euro and crude, and to another extent, SPOOs, which I haven't done too much lately. Although I was mixing it up last Friday, I don't have to mess around with the dollar yen, and I don't even have like I said, I keep missing the move here. It always keeps falling short. Fell short of 1466, fell short of the 1430, and so forth. I don't need to mess around with it. Just don't need to. But for those that are, I'm not even interested until we get back above 115, and I'm not even selling it against 115. I'm gonna let it give. Not guaranteeing that it will, but I'm saying is, for me, I'd wait till it gets above 115, let them scoot them, and see what it can do. And then if it starts to weaken, then. Cliff says he's short from 112. Well done, Cliff. Sheesh, man, fantastic. Cliff says he has no faith in the euro. I don't necessarily have faith in the euro either. I'm just saying it is what it is. But great, fantastic short on that. I was talking about 1225. I'm like, this is getting kind of stupid. And what scared me is that the eurozone threw everything but the kitchen sink, and this thing did the opposite, and we already saw that the last time. They might want to lay in here, whatever, but they're still going to have an underlying bid tone. I mean, if you short from 112 and you want to hang on until the cows come home, that's your business. But I'd be looking to, come in here. We talked about the gold market yesterday. I forgot who asked about it. We talked about this 1239 and what we're looking for, and will it regain the 1264, which it did. We had that marked off, and so it did come to the 1239. Then we reassert ourselves. And remember, we've been talking about this 1289 for a long time. That's that big key level, and it came up to it. We've made it up to 1287.80, so it missed it by $1.20. That's that big level, 1289, and we've sold off a pretty decent chunk of change from that area. Obviously, if the dollar weakens, is going to continue to be supportive of gold, but you can see here that you're better off trying to play against these levels. We talked about that before, this 1239, and then previously we've been talking about the 1289, which it finally made it up there and got thrown back for about $25. So we're going to take a look here at the Canadian dollar, so hang on. Well, with crude continuing to remain well bid, I addressed this yesterday, or mentioned in Twitter, is that as long as Brent remains still bid, the crude oil is going to also remain bid. Crude oil is just following the Brent, and that's exactly what's happened. We've even gone higher in crude, and I really don't expect. I mean, what I was saying is that I didn't expect much movement above 38.47. And they're not up a whole lot above it. I mean, they're obviously up an extra 40 cents. But I mentioned yesterday, going into the Friday, it's best not to just go in and stay short. Just come in. You had some great action this week in the crude oil market. Why do you want to fight it as long as as long as Brent remains on the bid? So we'll take a look here on obviously, because that impacts the Canadian dollar, and that's why the dollar CAD the Canadian currency itself continues to remain bid while crude is making this rebound. So there's not really a whole lot happening here in the crude oil. In the Canadian dollar. I still think that the crude will go on and ease back, but like I said, as long as the Brent market continues to remain well bid, it's just leading WTI by the nose ring. And with that, then you're gonna realize that the Canadian dollar is just going to remain relatively weak. There's no way that thing's going to be able to pick itself up if the crude oil remains pretty well bid. And I don't see anything changing because, like I said, as you come into a Friday, nobody wants to go in and fight what the prevailing trend is for the week. And the prevailing trend, obviously, like in the energies, the prevailing trend is up. And we'll go into the crude oil and Brent in a little while after the break. But it's the same thing with the Canadian dollar or dollar CAD. Why are you going to go in and fight what is already a strong prevailing trend? So that's why it's going to, people trying to buy it let's say on a Friday, you're going to have a tough time. The same thing I offered yesterday afternoon. You had an opportunity to make a good chunk of change on Monday and Tuesday and Wednesday in the crude oil market. Why the hell do you want to put yourself at risk to try and take the other side on a Friday? Just go in and let them do whatever they want to do, unless you're scalping it, and then just come in that Monday. Well, we'll address the crude when we go in and get back from the break. Just a moment. So when we get back, we'll go on and, as I mentioned, we'll go on and cover the crude oil market, and we'll also take a look at Brent, and then we'll take a look at the SPUs. If we have time, we'll take a look at the 10-year note, which I don't follow too close, but I know it's been under siege. If we get the opportunity to go and take a look at that. SPUs continue to remain well bid, and I've been saying that since Friday. And I mentioned that yesterday for the ECB. I mean, someone was saying the SPUs are going to sell off. The SPUs are not going to sell off. I already said that. They're going to have a nice bid tone. Now we saw a yank down, a little bit of a yank down yesterday. No doubt about that. In light of what was happening with the ECB. But that being said, here we are at 2,000 back up again. It's got a good underlying bid tone. But like I said, that was well before even the ECB. We're talking about it continue to remain bid. Obviously, everything, was having a tough time post ECB in the morning. But we'll go on and discuss the crude and Brent and SPUs when we get back. If we have enough time, we'll take a look at the 10-year note. And thanks for joining us here on the European Crossover. Okay, everybody, welcome back to the crossover. Just get rid of this. And Amanda was talking about the Bittersweet Symphony, that song by the Verve. Yeah, it's an excellent song. So here we are in the WTI, and you can see it easing back just a little bit from this 38.92 area here on the 30-minute. And part of the reason you're seeing that is because of what's happening here in the Brent. And I had marked this off, and it's actually 40.92. I think they had, 40.91. And you can see here, like I said, they're holding it up here, and I tweeted this out here, on the inside call. 40.73 is a 50% of 27.11 to 54.33, and I just don't see the Brent making another leg. I know that you have to respect the market, and that's why WTI came back, because we've had this good run in the Brent, and it did pull back. But I tweeted this out yesterday, was that we'll have to lose 38.98 in order for this market to turn now lower. So I guess what I can do is just to mark this in red, kind of like a bias pivot to the downside, because it will have to lose 38.98 in order to trigger this for like, okay, it looks like that's it, as good as it gets, and we'd have to see a much, more deeper move. First target would be 37.28. So let's go mark off. Right there. So you're seeing a little bit of a gravestone doji against this 40.91, which I'd marked off here earlier. And the reason this is key is because I've been saying this, is that Brent is driving the bus. Crude oil is just a passenger and is doing whatever Brent does. Crude oil is just following it. So the idea that we're having trouble, you can see my level here, 40.91, coming across here, it can't get a grip or can't get some traction above 40.91. Now, it didn't fade by very much, but it's impacting what's happening here in the crude oil market. Now, I'm just talking just from a scalping standpoint, but I think it's something that you have to keep in mind for next week. Because it's pretty hard, not that they couldn't go lower, but it might be a little bit hard to do it on a Friday. We might still go and yank down and move towards close to this 40.15. Technically, it's setting itself up. This bar will close at the top of the hour, but you're going to have a gravestone doji against this key level 40.91 that the market's had some trouble with. Now, WTI is still holding up relatively well, and we have this 38.92, and on the 2-hour, 38.78, which is what I like to, I like to see some confluence among the two different time levels or charts I look at as far as would it be, the 2-hour and the 30-minute. But at this point, like I said, it's been a good week. People had great opportunities. I know Monday was I came in and I thought we were going to make a high Monday in the European session, so that was a little bit tougher for me, but I was able to come back very nicely in Tuesday and also Wednesday. So the thing is, for me, I don't see the necessity of putting myself to risk here unless I see some setup. But I mean, as long as the Brent remains well bid, I don't think people are going to be leaning on it that hard. I see in the WTI going into a close on a Friday. So I'm just saying, you know what? I'll just sit back. I can just wait till Monday and come and engage the market. I mean, if we break them lower, then we already know which way it's going to go. Obviously, what's going to be key is this 38.47, and this was key all along. If you remember, this is where I mentioned this on Tuesday, and I tweeted that out live, and I said 38.47 is a bias pivot, and then the market ran out of gas, and then it was, Katie bar the doors. They broke them pretty hard. Then they rallied them up and took them up again, and this happened going into the New York pit close. And I talked about that after when we got this highs, because I've been talking the whole time I was barking about Brent crude, and I guess nobody's paying attention to it. So when Brent crude got up to 41.05 or rescaled 41.05, nobody wanted to be short. And WTI, which had been trading like at 37.50, 37.60, 70, all of a sudden got a fire under its tail and just started screaming into the close, and we got up to 38, I think it's 56 or something like that, and then we quickly turned around and lost 50 cents. So that's saying it's pretty key that Brent is driving the bus on this. So we've got 38.78 here on the 2-hour. Move that up a little bit closer here. And my whole thoughts was, I thought, I don't see them making a move, any significant move above 38.47. And they got above 38.47, and they quickly came back down here. You can see here, came back to 38.51 for support, just above this 38.47. I just don't see them. I just don't see that there's enough of a move up here now. If someone said, you know what, I'm willing to risk $1.50 or something like that, yeah, you can go and short up here, have to hold over the weekend, something I will not do. But I'm saying is I can see where someone says, you know what, I'll take the opportunity. I mean, I'll see them getting above 39. I'll take that and see if they bring them on down to the lower 38s. You can go and do that. It's just not my style to have that risk going into a Friday. I guess maybe it's the influence I have from trading FX. Although FX just has its own different style, but like I said, because you have a lot of retail, once they get going in one direction, it's pretty hard to stop them on a Friday. So that always factors in my thoughts. Doesn't mean I won't trade crude today, just saying this. I'm not looking to launch something unless I see something really give me a good signal, which you're kind of getting right now, is in the Brent. But like I said, make no bones about it. Brent's the one that's driving the bus. It's not about WTI. So WTI is just following whatever Brent's doing. Obviously, up here, and this is only on the 1 minute chart. We're trying to work a little bit low, but you can see them hitting some stops up here where it runs out of gas. But like I said, this is on a 1 minute chart. I generally don't pay attention to this footprint in this quiet area, or quiet time, I should say, till we get into the New York session. We'll go on and take a look at the notes in the SPOOs. AB wanted to take a look at the notes, so hang on a moment. Let's get switched over to that. This market's in bad shape. I haven't paid much attention to it whatsoever. So you want to go and take a look at some fibs, so let's see where we stand. Well, 2808 is a 61%. We're not that far away from it. What are we, 7? And that's a pretty key area here, too, if you look at this level. So 2808, we can mark that off real quick. Also, if you look here, it looks pretty solid here. You see here the market, this was a high right in here. Then they came back and they battled it right here. We eventually got up higher. We came back, we battled again here. So this area right in here, which is 2506.5. Just call it 2506. So then they can maybe take one more last dip in here, and that'll probably coincide with the SPOOs. Yeah, the SPOOs are they're battling over here at this 2001, but we could make one more last dip down here. We might even be able to go in and tick them down here. I don't even know why I'm not mentioning that as 2506. Should be 2806. And then just a little bit lower. There, 2801. So I would like that, this 2801, and if that's to be the case, that'll probably come with, if the SPUs can get back above, we talked about that big, huge area. At 2018 being a bias pivot. And that might be where they can go on and make a run eventually. If we get up to the 2018, I'm talking about in the SPUs, we should see a pretty good reaction at that level. And I think you'll see some pretty good pushback against that area. And that'll probably coincide with the bonds. Could even push them a little bit below 28. But this 2808, 61%, and the 2806, which is pretty solid here, and just below the 28, you could maybe see a scared dip below here, and then I would definitely cover on any moves as we test this 28 and probably take it out, like get to maybe like 2730, 2728. I would definitely be covered on that. Now that's provided the SPUs going and march on up. I'll take a look at here. We make this run up to 2018.75. And that's a huge bias pivot. It'll take a little bit of work. Obviously what happened in the post-ECB certainly weighed on it, without a doubt. But that's a huge pivot. We'll try and drag this back. So you can see the significance of this 1875 coming across here. And that's why I've got it marked in red as a bias pivot. If we can make it up there, I expect to see some pretty good pushback. And if we do, that's going to go in and coincide with the bonds making those lows. And then from there, you can see a nice reaction from the bonds. So I think we're opening ourselves up for a test of this 2018.75. I don't know what's going to be the catalyst for that, but I'm saying is the market has come back really well. Actually, to come back to the 68.50 and be right back up here, I think we can go. Well, I mean, we may even overshoot this, and the overshoot, if we do, would be the 22.50. But I really do see the market having some trouble sustaining move above this 2018.75. But I think we're open. The market technically is open to going and test higher here in the SPUs. What I would do is, I'd be more apt to do is, although we've had a tough time with the ECB, I'd be more apt to see if they can let them run going into the day, and then then I think you could take the other side. Either you can run with this, which my levels have been, and I had marked this up from 1050. You remember last Friday I called for, I was saying that 575 was a key level. That was right when it was hitting that level. And I said above that you had 1050, 15 and 1875. And then you can see here yesterday's high was 1050, 10 and a half. So there's that 10 and a half. Well, I actually hit 10 and a quarter, so I missed it by 1/4 of a tick, a handle. But I had that marked off, and I mentioned that last week when we got up to 205 and a half, and I said that was a level. And then we ticked up a little bit higher, but that was when the crude WTI made that run to 36. When it made the run to 36, that got the SPUs on the bid. But I said that it was an artificial bid. They were artificially going to hold them, and then from there we saw them go much lower. Eventually, and even to my surprise, then they went all the way down to 1992. I see the euro's already ticked on up above 11. We're talking about that area, and we're moving to the euro. Break's going to be coming on any moment, so we're going in. Let's go and switch into that. But we've seen this euro already going and come back, and frankly, I was even a little bit surprised it even pulled back this far. But like I said, we talked about being careful and all the support that was here against this 1070. And once again, like I said, if you're short this market, I've been, covering. Even if you don't like the euro, I'm not crazy about the euro, but it's, we've really come back a ways, and we've got that this market on the bid tone now.